Hey everybody, how we doing this afternoon? Sorry to keep you waiting a couple of minutes here. Get us up and going. If I can just get a quick audio and visual check from you there. Hey John, how you doing? Sounds a little muffled, huh? Hold on a second here. Thanks, Tony. Alright, let's see. Any better there now or still a little muffled? Hmm. Okay, give me just a second here. Give me just a second, Lori. I'm going to upgrade you in case I pull you on here. So give me a second to do that. There we go. And let me just make sure we've got you muted here, Lori, or if you can mute yourself there. And that way you can just pop on as needed here. Sorry guys, we're going to cover some scalping stuff today, and as you guys know, Lori's our scalping queen here. She's been taking charge of all of our new scalping tests here, and I know she's been working with a lot of you guys in the rooms, posting a bunch of her trades. She also did a THT on Saturday for you guys, and just kind of wanted to start off there. Today's going to be a pretty short webinar. Last week on the webinar, Daryl went through and covered the new trend catcher with chop filter with MVP system, and I know you guys were fired up about that. Talking to you about reading the markets, and we jump in every day not knowing if it's going to be a choppy day or a trending day. So you might hop in on one of your trend strategies and then all of a sudden you get hit because the market turns around and you wish you would have gone and just done a scalp instead. So the next one comes around, you hop in and you scalp it and you get out real quick, and of course the market flies, takes off, jumps 50 points, and you wish you would have stayed in on a trend. And you go back and forth, you're changing your strategies, you're jumping around, and that's one of the most frustrating things that any of us can deal with. So Daryl went through with you what we're working on, and want to make sure that you guys know where that's at. Some of you have been asking about that. If you go under the questions tab of the forum, general trading forum, and you go back to Apex newest webinars, and I just totally messed that one up. Go back to newest webinars here, and last Thursday's webinar. You can go through and watch those videos. We have it all broken down right here. Thursday Apex webinar 423. I saw a couple tickets come through and a couple of questions in the rooms about it, but that is where the webinar is. You've got your just quick welcome and intro videos there, and then he jumps into the chop filter with MVP entries, talking about jumping in, taking every entry as a scalp, setting your stops and your take profit. But if by the third or fourth bar the MVP flips, go ahead and trail your stop with the MVP, turn that trade into a trend trade. Okay. So make sure you guys go through and watch that again if you have not. It is an extremely helpful video to watch, and especially with some of these chop days, just takes it just takes some of the guesswork out, and it goes back to what you hear Daryl say a lot, which is do what the chart's telling you to do. Okay. Rebecca, you asked about the chop filter. Actually, we're working right now on the chop filter and getting the chop filter to match up with trend catcher and stats and all that. We're working on that first before there's any other releases. Okay, so the programmers are finishing that up, and then from there, there's a few other adjustments and a few other things we'll be adding to it. But the next thing we'll be adding to that is the MVP. Okay, which will be the new trend catcher. Okay, the old trend catcher settings are all there for you. Some of you guys have asked, well, I like old trend catcher, I like chop filter, well, I really like the MVP. The programmers are working on all of that right now. They're finishing up chop to have all that match up with sim and stats and so on, and the next thing from there will be MVP. Okay, because that is where we're headed here with trend catcher, because that is really what it's all about. Is what do I do today? Do I scalp today? Do I trend today? Do I have multiple different systems for both? We're trying to combine them all into one system of trend catcher. All right, and you're taking your entries, setting it up as a scalp, turn it into a trend if it goes in your direction, keeping it all in one simple system. Okay, so we're just constantly tying these new things in, adding these new things in. As we come up with these new things, we see these new things, we test them, they're great. We teach them to you guys so that y'all can use them right away, just like with the chop filter, and just like last week with the MVP, and then with some of the scalps. We teach you those. You can manually trade them. You can manually put them on your chart. And as we do that, we we work through it all, get all the rules down, hand it over to the programmers. All right, and that sometimes takes a lot for them to tie all these pieces in together to be able to make new releases of the toolkit that tie all those indicators in automatically, and stats and so on. So we'd all love to have everything overnight, but the programmers can only do so much, unfortunately. But we'll definitely still keep you updated there. So definitely make sure you watch this video. I've talked to a lot of you that have not, and it will make a world of difference for you. After that, Daryl started talking about scalps, and as you know, if you are on that video, he had some tech difficulties there. His internet went down, so we briefly covered them a little bit, and then Lori did a helping traders webinar on Saturday covering scalps. So all the info you need as far as the MVP system is there. What we wanted to cover today was some stuff about scalps. I know that, like I said, Lori covered that. You can go right here and click this link, and it'll take you over to that video. So make sure you watch this as well. Lori goes through showing exactly how she's doing the scalps, some of her entry rules, exit rules, profit targets, stops, and we're going to cover a little bit of that today. Like I said, going to be a really short webinar. Just wanted to clarify a couple things on the scalps and a couple of new rules, but make sure to watch that video. She'll go through and kind of map it all out for you. She's been rocking it. I think Lori's always trying different things and testing things for us. She's our testing queen there, but she has been focused just on this since last week and been trading it. I know y'all have all seen it in the rooms, but correct me if I'm wrong, Lori. Since last, Tuesday or Wednesday, since you were doing this, you've been hitting your 5% in your account and stop trading within normally the first hour of your trading. I think the most was 2 hours. Is that correct? I mean, she's been spitting these things out left and right and sending me screenshots every day of them. I know you've been seeing them in there as well, but unless I'm mistaken there, I think she had one day it took her 2 hours to reach her 5% goal, but she's been doing that every day. I think today she only did 2.5%, she said, because she stayed out of some stuff with news, but she's been knocking it out of the park with this. So make sure to catch up on that video to help tie in all the details there about the scalps. Okay. Yes, Khalid, if you go to let me just cover it again, getting a couple questions. If you're on the website, just go here to questions, trading question forum, and then go right here to the general trading forum. So right here it says hide or show. You might have to click show. Go right here to newest webinars, And you can watch the video from last Thursday where Daryl covered the trend catcher with MVP. And then there's a video in there about scalps that has a link to the THT that Lori did, or it's also right here. All right, using trend catcher for trends and scalps, because Lori kind of covered that as well, not just scalping, but she recovered the MVP. So that is where that link is. Okay, a couple of y'all were asking about that. Another very important link to make sure you have these scalps down. If you go over here to S10 Systems in the forum, that will take you right here. You go to Trend Catcher, Future Forex Spreads, Trend Catcher with Chop Filter. Go right there, and I believe it's this very first one right here. This, you can watch all of the videos, but this forum post, some people are a little more visual, need it laid out and written out, and really need to make sure they see the rules, kind of ABC, step by step. You can go through here, and all the videos are laid out for you with notes, okay? Also with screenshots and arrows kind of showing you exactly where and what to do, what not to do, entry and exit rules, all right? And it just goes step by step, walking you through that with notes and videos. And you scroll down a little bit more, and right here, how I know when to trend trade or scalp with Trend Catcher, all right? And again, it walks through there step by step with arrows. I know sometimes people say, hey, I love the videos because I can see it, I can pause them, I can rewind, but sometimes it was just too fast for me and I didn't quite get it. I really need it laid out. Well, we have both for you. All right, the videos, the notes, the screenshots, the arrows, the trades marked in order. Step 1, cyan down arrow. Step 2, trend catcher down arrow. Step 3, chop, boom, boom, boom. Okay, everything's laid out here for you. I know a lot of you have seen this forum post and walked through it. A lot of you have not. I know we've sent some of you have asked in chat and on tickets in the forum. We've sent you here. Y'all did not know this forum was here, laid out for you step by step. I've talked to a couple of people that said they keep this up all the time in front of them. A couple of people said they have printed out certain screenshots of this, posted it right on their wall above their computer, as a kind of ABC 1, 2, 3 rule to help remind them for an easy reference of, hey, does the chart I'm looking at right here, I think it's an entry, but is it? Let me reference this. Very easy to do, and use this as your rules. And then right here, the scalping trend catcher using the slingshot method. All right, James, you're asking, obtaining the sketch reference and Lorish, using any new indicators, setting tool, etc. that the elite traders don't have access to. No, as an elite trader, you have access to everything that Lori is using for these trades. Okay, if you have diagnostic bars and trend catcher, you've got it. You've got everything she's using for these trades. Okay, you can literally hop on and start doing them. Watch that video, watch this video, go through this form here. You can start doing these right away. All right. So we've got all this here again laid out for you, step by step. Because I know there was some confusion about exactly what these trades are and how to do them. It's all laid out in the videos. It's all laid out right here in the forum, step by step, showing you exactly what to do, what not to do, and so on. So let's talk just a little bit here. Just want to catch you guys up there. And hey, Michael, how you doing? All right, let's just talk a little bit here about a couple of things. Okay, so got you all those links there. So in a nutshell, a lot of people are asking about these scalps. Okay, how do I do them? What are the best times of day to do them? What exactly should I be using for my stops? We've got all the information laid out in the forum there for you. Okay, and I know those of you that have been involved in the room, that Lori, for example, and everything I've tested as well on pretty much all the indices, most of the commodities, oil, gold, and so on. We're using 12-tick bars. On bonds, I know y'all have heard Lori talking a lot about bonds lately, ZB and ZN and so on. ZB, she's using 8 ticks and 3 ticks. She uses 3 tick charts for some of her quick scalps. You've probably seen that, and she covers that in her video, reference that, and 8 ticks on her trending scalps, if you want to call them, or more of a trending. But you have to, you need to test your markets. Okay. Some of you only trade oil. Some of you only trade indices. Some of you with indices say, I only trade the Russell because I like that it's $10 a tick. Other of you say, I hate that it's $10 a tick. I have a small account. I only want to trade NQ. Well, dig into that yourself a little bit. We recommend starting off with 12, like on the indices, but dig in for yourself. You might find that your particular trading style, you like something a little bigger, a little smaller. Put in the time, do the market replay, and check it out for yourself as well. Okay. And real quick here, a lot of you have seen, Lori's screenshots and are talking about ZB and talking about bonds. Bonds are a great thing to trade. She loves trading them. I've traded them some. Yogi loves trading them. But the bonds, the bonds are pretty smooth. When they trend, they trend nice and smooth. But you're also looking at, on ZB, for example, $32 a tick. Okay, so it's not on a futures contract, it's not $5 a tick like NQ or ES or DX. It's not $10 a tick like the Russell TF. It's $32 a tick. So yeah, is that nice when you think, man, I only got to get 2 or 3 ticks in my favor to make $100? Yeah, that's very nice. When you look at some of the other, when you look at NQ going, okay, it's $5 a tick. I got to get like 10 ticks to make $50. But on bonds, I only got to get 3 ticks to make $100. That's awesome. Well, it can be, and it is nice, and it happens quite a bit. But you also have to look at, when you think about your stops and your stops, I mean, you got to give these things a little bit of room to breathe. If you hop in a trade and only give yourself a 2-3 tick stop, that thing's going to just pop against you left and right. You've got to give yourself some room there. So, if you're not comfortable giving 4, 5, 6, 7 ticks, at $30 a tick, well, bonds might not be the right thing for you, on ZB at least. So I know a lot of the examples and screenshots we've showed are bonds. We've also showed a lot with oil, DX, NQ. So I'm just saying, keep that in mind. I've heard a lot of you saying, oh, I love some of these results, I'm going to hop over to bonds. Not telling you not to do it. They're great. But keep in mind, ZB itself, you're looking at like $32 a tick. ZN, I believe, is like 15 something a tick, so that's a little better. You can do ZF as well. Yep, thanks, Mike. Exactly. You can do ZF as well. It's like $7.81 a tick. And I think on Ninja, ZB and ZN, I think the margin's only $500. On Ninja, I believe ZF is $500. On AMP, it's only like $250. All right, so if you've got a smaller account, ZB, even ZF, or even ZN might not be your first choice to hop in on bonds. Okay, but ZF might be. All right, you got $7.81 a tick. You've got a margin of $250. Not too bad. Okay. Otherwise, you've got plenty of other things to trade. This system works on everything. All right, on gold, oil, bonds. I know a lot of you love DX. That's the dollar index. A lot of you like DX because it can also move at night and overnight. With opposing to the other, being compared to the other currencies. As you know, your indices don't move a whole lot in the evening time, but sometimes DX can move, and you can trade it at night. It's $5 a tick. You've got your indices that you can trade. And again, test those. You also see that times of the day and days of the week might be a little different. I know on bonds, for example, Lori loves bonds in the morning, because they get up and moving early. The indices are moving really good in the morning. You know, sometimes you might find on the indices that the afternoon is not quite where you want to be. Okay, so make sure to do some tests there. Okay, so let's just take a quick peek here and just recover a couple of entry rules real quick. And Lori, feel free to hop in here anytime. All right, if you go through those videos and through the forum, you will see the rules laid out for you step by step. I'm actually going to pull this over on a chart here. Okay, let me pop this chart up. Here is just a basic ZB chart. Okay, now in a nutshell, all we're looking for here, and keep in mind, I'm not addressing all we're addressing here are scalp trades, additional extra scalp trades. We're not addressing your initial trend catcher entries. We're not addressing your MVP flips and turn your initial trade from a scalp into a trend. We're not at all covering the trend catcher MVP entries here. This is just showing you scalp trading. Some of you are only scalpers and only want to scalp. That's fine. Some of you say, no, I want to do the MVP, the trend catcher and MVP system. I just like to have some other trades in between that I can possibly get into as well. Okay, so all you need, and again, a couple of you are asking, hey, what do I need for this? Okay, all you need is and actually, I'm going to show you what you need here. Here's how simple it is. Here's how laid out we've got it. Remember, I was referencing this forum post where it walks you through step by step exactly how to enter these trades, exit these trades, and so on. And examples of trades, you go right down here, and we've got it exactly here for you. What do I need to be able to trade like this? What do I need? It's right here. Shows you exactly the indicators you need. Shows you exactly the settings you need to have everything on. Exactly what size of period measurement for everything. Okay, so if you're wondering how to set it up, it's all there in the videos. We walk through it, but if you don't want to have to go through the video and find it and go back and forth and pause it, it's right here. It's literally all laid out for you. Okay, so I believe James was just asking, is there something new I need with the settings? Here's the settings right here. Is that helpful for you, James, to know right there? Set it up just like this, exactly how you have it here. Okay, so it's all laid out easy cheesy there for you. Just go through the post. Okay, listening to the same for the smaller tick size charts. Ned, yes. You're asking, like Ned's asking, are those settings the same for the smaller tick size charts? Yes. You mean, for example, if we're talking about 12 ticks on oil or indices, but 8 ticks on ZB or like a 3 tick, yes, you would still use these same settings. You would just change it over to the different bar size, but your settings would still stay the same. Okay, so nothing here would change. That's correct. Yep, all you do is just change it over. Okay, so the settings are right there. So basically, once you have those settings done, okay, what you're looking for here is, again, we're not talking about trend catcher MVP entries. We're looking for additional scalp entries. Okay, we're looking for cyan bars. We all know what a cyan arrow is, right? A cyan arrow is a heads up to a potential trend catcher flip. Okay, for example, right here, you see here's a cyan. You've got the market coming down. We have a cyan up long on this bar here, and that cyan will appear at some point in this bar, and that's saying, hey, heads up, the market's been going down, but everything in the background, the system, you know, the trend catcher system calculation is showing a little bit of retracement here. There's a potential reversal here in the trend catcher. It could now go up, and if this bar closes up and then this next bar breaks that by a tick, then we get the confirmation, green, to say trend catcher flipped, enter and go, right? That's our normal trend catcher entries. Same here. Potential down, it breaks it, go. Potential up, breaks it, go. Same here. But you'll also see at times where you will get a cyan arrow as a heads up, but it doesn't actually flip, right? We don't always get a confirmation that it's flipping because market's going down, 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 boom, hits a little resistance, starts to retrace and come back up. So the system telling us, hey, market might be coming back up, might be flipping here. We get this arrow. But it doesn't flip. It doesn't close up. It doesn't close as a long green bar. It comes back down and closes red. And then what? Keeps going down a little bit. Okay? In a nutshell, that is what we're looking for. In a nutshell, that is the scalp we're looking for. All right? And we're calling them the slingshot scalps because the market's coming down, pulls back up, and then releases and comes down. Keeps going down. Okay? Let's look at a couple more examples. Here's one right here. So we're headed down. Bam. See right there? Get a cyan arrow. Hey, check it out. Market's popping back against you. But nope. Comes back down. Still closes down and goes. Okay? So that is kind of the first simple step of our scalps here. That's what we're looking for. All right? Is we're in a trend. We're in this case, a downtrend. Got a little bit of pop in the market coming back against you. All right? And then when the bar does not close the other direction, does not close up or long, it comes down, closes down, then bam, this next bar will open and we enter one tick below the low of this bar. Does that make sense, John? A couple of y'all are asking, okay, where do I enter? Well, you don't enter while this bar is forming. You don't enter in the middle of this bar because the market's coming down. This bar opened down, but wait, it's coming back up. It's coming back down, coming back up. Might be tweetering there for a little bit. You're waiting on the close of this bar. When you have this cyan arrow, this heads up, you're waiting on this close. All right? Because you're waiting to say, okay, what are we doing here? I got a heads up that it might reverse. Is it going to reverse and go the other way and potentially give me a regular trend catcher entry? Or is it going to say, nope, selling, 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 wait, a little bit of resistance, there's some buying and selling, but nope, it closed back down. Market hit some resistance there, buying and sellers were figuring it out, but nope, kept going down, and then it just goes. So when this bar closes down, you're going to enter the trade one tick below that close, basically right here, and then the market goes. Okay? So that's an example of a short trade there. Okay? Let's look, let's find a quick example. All right, somebody wants to see an example of a long. Let's see here. Let me scroll back and, okay. I don't know if you can, how well you can see this, but we're going up, right? And then we have, no, that's not a good example. Let me find one here for you. Give me just a second. Keep in mind, these are 8-tick bars. So depending on what type of scalp you're going for here. I'm too far back. Here's the thing, guys, very important. If you have a chart going, these cyan bars, or these cyan arrows that appear but then never confirm, they'll stay there, okay, if you've got a live chart going. But if you pull up a chart and you look back historically, they're not there. Or if you hit refresh, they're not there. Because the trend catcher system is set up right now on historical data to only show you the confirmed flips. Okay, so if you want to go back and test it, we cutting in and out a little bit there. How's that, Tony? A little better? Hmm. Let's see here. I don't know what's going on with our go to meeting here. All right. Still pretty bad, huh? A little better, John? Okay. So if you want to go back and test this, you have to do a market replay if you want to back test it. All right. So I have market replay on the past couple of days here so we can see these cyan arrows. Again, if you're trading it live, they'll pop up and they'll stay there unless you refresh the historical data. So if you want to back test this, don't just pull up your chart and look back going, hey, there's no trades. I never get any trades. The cyan by themselves are not going to show. All right. You have to do market replay. Okay. So just to clarify that, because a couple of you said, hey, I'm not seeing anything. Well, because it's not going to show without market replay. Okay. So that in a nutshell. Here's another one. We're coming down, 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 boom. Get a cyan. Comes back down. We get in, pop it. So these are 8-tick bars here. So I think on 8-tick bars, I think Lori, I don't remember what scalp you're going here for, but again, on ZB, for example, here, you know, she got, you know, 3-4 ticks on that bar, 4 ticks on this bar. I mean, that's 7 or 8 ticks at $30 a tick. You know, you might only be going for 4 ticks there, or 3 ticks there for $100. Boom, getting them left and right. Okay, so that is, in a nutshell, the trades we are looking for. Okay, here's another. I think we just looked at that one. Coming down, pops up, comes down, boom, you get your ticks. Okay, it's the same exact rule. I'm just happening to show you ZP here. It's the same exact rules on everything, on oil, the indices, anything you want to trade. Okay, now, guys, hold on 1 second here. All right. So now there is one other type of trade, and we'll get into a few more. We'll get into some of the stops and so on here in a second. There is one other kind of trade. So this here is what we call the slingshot trade. Okay. So we're headed down. We get a up cyan, but it closes down, keeps going. We hop in 1 tick below the close of that bar and go. Now, what happens in this situation here? Basically, what this trade is it's a contrarian trade. It's a retracement trade. How many times have you guys gotten into a trade because you thought the market was heading one way? Excuse me. As soon as you get in, the market pops up the other way for just a second, and you get out, right? Because it hits your stop, and then boom, what does it do? Heads right back your direction. And you're like, oh man, I thought it was going that way. It popped against me for just a second, and then boom, kept going my way. Y'all see that happen all the time, right? Whether you trade spreads, binaries, futures, whatever, we've all seen that. Because a lot of times, I mean, there's times the market just flies one direction, never retraces. But most of the time, even in an overall trend like you see here, even though this is an overall, for the day, a down trend, there's times the market down, pop up, right? We've all seen that. So basically what we're looking at here, right here for example, market's going down, down, down. What happens here? We get a cyan arrow saying, hey, the market might go up. And what happened? It did. That bar did close up, correct? So when we get this cyan arrow and this bar closes up, are we immediately selling 1 tick below or 1 tick above in this case? Because remember what we were doing here. I want to make sure you guys understand this. Some of you are like, hey, this is simple, I've got this, but we've actually got a lot of questions here. So in this case, in our slingshot, market's coming down, potential that it's going to go up, but nope, still closes down, we enter. But in this situation, we're coming down, we get our cyan arrow, and what happens? It closes up, and what do? What happens to the next bar? It closes back down. So it's the same concept of the market popping up but then coming back in our direction. So in this situation, this is also a slingshot. Some people have called this an elevator trade because it pops up and pops down the way it closes, but they're the same. It's the same concept. It's the same trade. It's all based about excuse me, getting that cyan bar but then waiting for a close back in our direction. So market's coming down, cyan bar, boom, up close, and then what? Down close. So then what we do? Then we enter back in again. And as you see, pops down and gives us our ticks. Okay. Rebecca says retracements are my favorite, and they have a high probability of winning. I have more luck on these than the slingshot trades. Both are doing great. Slingshots are doing great. The retracement trades are doing great. There is, in a sense, and I can totally see that, Rebecca, where, you know, when you have that actual retracement with a bar close up, that slingshot trade, or if you want to call it an elevator trade, and then back down, it's a little bigger of a retracement, which means sometimes when it did retrace that much but actually come back down again and close, you know, it might be coming back down with a little bit more volume, a little bit more pressure behind it. So those are a little bit stronger of a trade. I would agree with that. They're a little bit stronger of a trade than just a slingshot, but you don't get a whole lot of them. All right, and you get a good amount of those slingshots. They both work very well, but yes, I know some people that are only taking those. Okay, so guys, I know this might be very redundant for a lot of you. They're like, we've been doing this all week in the room, but there's several people on the webinar here asking about the very basics. So does that right there, just that first step, we'll cover a few more rules, but does that first step make sense to everyone? What we're looking for is a trend, cyan bar saying, hey, cyan arrow saying, hey, might go against you. And when it retraces, you get that wick, it's going against you, but then it comes back down and closes the same direction of the trend. When it closes, you get in one bar, one tick below that close for that scalp. Or for the elevator style slingshot is coming down, coming down, coming down, boom, closes up, then closes down, then get in. Same thing. Okay. Let's see here. Actually, James, we're not looking at the chop indicator. Okay. On these particular trades here, we're not looking at the chop indicator. The chop indicator is going to be what we look at for our initial trend catcher entries, and getting into that initial entry, setting that up as a scalp, then possibly turn it into a trend with MVP. But for the scalping part itself, we're not looking at that. Okay. Ned, how to avoid? Yes, Mike, we do. I'll show you that. We'll get into those rules here in just a second. Right now, just making sure everybody gets the basic concept of what we're looking for to enter the trades. We'll apply a couple of rules here. Ned, how to avoid the long retracement you first pointed to? Ned, I'm not sure. Can you tell me what time frame on this chart your question is about? I'm not exactly sure. You're talking about right here? Entry at... Okay. Okay. Actually, the reason we would have avoided that... Okay, I'm not quite sure of your question there, but are you talking about if I got into this, if I took this entry, how did I not get stopped out down here on the scalp? Is that what your question is? Well, keep in mind, I'm scalping it. So it's coming down. I would not have still been in the trade here. All right, if I was trend trading, okay, perhaps, then yes, that would hit me. But this particular scalp right here, When this cyan bar arrow appeared, market was heading up, but it came back down. I entered my scalp here. Keep in mind, these are 8-tick bars. So 4 ticks, 4 ticks, 4. I was already way out. Okay? We weren't even in still there because we're scalping it, not trending it. But even if I was trending it with MVP, if I'm using the predictor arrows as my trail, I didn't get popped out there. Because remember, with the trending strategy, we're not getting out until it flips, so we rode this whole thing down on trending. But what we're talking about here is the scalping, so I'd have been out right there. Okay. You're asking if I would have started there, if I'd started here. Okay. Actually, you bring up a pretty long entry with long chop filter. Okay, yeah, if you're looking at it that way, if you're looking at an actual trend catcher entry, we're not really talking about that right now. We're just going over scalping stuff. But on that particular one, if you were looking at this as just a new trend catcher entry, you're going long and this is long here, boom, that would have stopped you out because you would have gotten in the trade and it would have come right back against you, it would have stopped you out. Okay, so, which again is why you would want to, again, with the new rules, you're entering these new trades as a scalp. The first initial entry is a scalp. That way you keep your stops really tight. Okay, so okay, I think we've got those questions answered there. All right, so does everybody understand the basics of the entries, the basics of what we're looking for on scalps? Again, separate everything in your head. We're not talking about trend catcher and chop filter and MVP entries, just for the extra scalps. Any questions on the basic entry, what we're looking for there? And what does it really boil down to, what we're looking for here? We're looking for cyan arrows, correct? That's what we're looking for. We're looking for cyan arrows. So I get a cyan, it doesn't go up, it closes down. Or I get a cyan, it does close up, but then the next one closes right back down, so I'm in. That's what we're looking for. Now, another nice thing about realizing what you're looking for here is cyans is audio alerts. I know some of you love the audio alerts, some of you hate the audio alerts. Okay, I know a lot of you have just turned off your trend catcher audio alerts because you're just tired of hearing it in the background. You know, potential trend catcher flip, potential trend catcher flip, trend catcher confirm. You hate it. Okay, that's up to you. Turn it off. I don't use them myself. I know Lori doesn't use them because it drives her crazy. But I know some of you said, hey, I'm watching bonds, DX, oil, and NQ. I've got 4 charts up and I'm trying to catch these scalps. Sometimes things are a little fast and I was looking over here at one chart and then when I looked over here back at my oil chart, oh man, I just missed that pending arrow. Went in my direction, I'd have made $200. I have to watch these things so close, just waiting for that cyan. Every 30 seconds I'm looking at 4 different charts, seeing if there's a cyan or seeing if there's an up close bar. You can turn on audio alerts and it will tell you potential trend catcher flip. Boom. Check your chart. Which one is it? There we go. Every time a cyan pops up, it will give you an audio alert. So for some of you, that's great. Some of you are loving that because you can be watching other things, doing other things. Boom. It'll pop up and tell you potential trend catcher. You look, you see a cyan arrow, you see this cyan appear right here. Audio alert goes off, you see that appear, bam. What are you doing? You're getting ready. You're watching it, you're pulling up your order, you're setting your, you know where this will be. You can use your bar range and know exactly where you will need to place your order. You've got it all set up and ready to go. So if it comes back and closes in your direction, bam, you're in. Or if it goes the other way, You can cancel it out. But very nice to have that. Okay? You have those audio alerts, pop it in there, place your order, it's done. Okay? Um, Gary, you're asking about the wicks that don't set off the cyan. What we're looking here for is the cyan. Okay? I know that some of you are trading on the wicks, any wick that has any kind of retracement. That is not something we're technically proposing or recommending to you, because I can show you lots of times where it can hit you. Yeah, there's a lot of times it'll work good for you, but there's a lot of times it'll hit you as well. The ones with the cyan are the ones that are giving you good retracement. Okay? You can play with those if you want. That is totally up to you. But just like Rebecca was saying, you know, hey, the ones with the full retracement that actually close the opposite direction, those are my favorites. I've had the best luck with those. Well, why is that? Because the market's coming down, does a big enough retracement to actually close up and change color of the bar, then comes back down all the way down, just giving you a little extra oomph there. It's coming, it went up with some good pressure, it's coming back down with some good pressure, going to keep going. It's a little bigger hump, you know, a little bigger hill on the roller coaster, which always means a bigger drop, or should mean a bigger drop. So that was such a big retracement and then back down, great. When you have a cyan bar, good size retracement and back down. Sometimes when you have these little wicks, doesn't mean it's not going to, but it's not as big of a retracement. Okay, you can do them. All right, and Daryl has talked about it. I think Lori's talked about it. I've talked about it. I mean, I know people that do it. But yeah, exactly. Like Gary said, but I did notice they lose more often than the others. Yep. There's times you'll look at your chart and you'll see them and you're like, well, man, why didn't I take that one? And why didn't I take that one? And look at all these. Okay. But I can probably show you, I can show you a good amount of them too that you're going to wish you hadn't. Okay. And if you're watching a couple instruments with these two type trades, you've got plenty of trades. Okay. You can do them if you want, but what we're looking for here are these cyans, because that gives you a little more oomph. Okay, that little more, that little better push there and pressure. So now, there's going to be times. Lori, jump in here anytime if you have anything to input. Just feel free to unmute yourself and hop in. Okay. There are plenty of times where you're going to have big trending days, all right, and you're going to say, man, look, I could just keep taking these things over and over and over again. Well, it's easy for us to look at those trending days and forget about the other days, and forget about the days that are chop. Okay, and so what we recommend at this point, you know, you've heard Lori say it, hey, only take the first one. All right, when you got a trend going and you get one, boom, only take the first one. Okay, or you could take the second one. You know, they're still good sometimes, but then the third one, we don't really recommend. Okay, you've heard that. We've talked about that in the rooms and the forums, and you know, but some of you are like, well, man, what about these long trends? You know, I could have gotten so much more. There were so many of them. That's going to happen. You're going to have those trending days. But then you're going to have a day too where you wish you didn't do it. Because is the market going to go down forever? No, it's not going to go down forever. At some point, it's going to start chopping. At some point, it's going to come back against you. You know, what goes up must come down at some point, right? So keep in mind, you can't just look at those good days. You've got to realize that there's going to be chop days where you wish you didn't take the third or the fourth or the fifth or the sixth one, because it's going to get you. And again, if you're watching a couple markets, you're good. But we've done a little bit of testing, And for now, what we're going to propose as the rule for now, all right, is when you have a flip, okay, you can take the first one when it's against the MVP. All right, you can actually take, now don't get confused here, you can take as many as you want against the MVP. All right, what do I mean by that? Well, the MVP was going long here, right? Green MVP. Then now we've got a downtrend, and bam, we get one there, right? We take it and it wins. So now the MVP is red. If you'd gotten two before the flip of the MVP, you could have taken them both. But you're very rarely going to get more than one, all right? But you take one, and then when the MVP flips, technically that is confirming your trend, right? When you get another one, you can take another one, all right? Or if you're, some of you say, no, I want to take more. Well, for now, just as a basic rule, what we're recommending is you can take one before the flip and one after the flip, all right? Especially if the one after the flip happens to be a full reversal, which you might call an elevator slingshot, again, which gives it a little more, pressure behind it. You might feel a little better about taking that one, okay? What we're going to recommend for now, and we'll put some more rules to it. We'll do a lot more back testing. You guys back test as well. Let us know what you find, what you think. But for now, that's what we're recommending. And you might be looking at this chart going, well, why would you say that? Because there's here, here, here. Well, let's pull up some others, and I'll show you where you got hit over and over again because you took too many. Okay? What we recommend is one, take one, or you can take one. If there's two, you can take them against the MVP. But then only take one more after the MVP. But now, that's only one. When I say one more after the MVP, that means only one more in the direction of the MVP, meaning only one more downtrend, down, short. If you have longs, if you're in a short MVP but then you get a long setup, you can take that, okay? Basically, to keep it simple, you can take as many as you want against the MVP, but only take two with the MVP, or only take one before, one after. Actually, did I totally confuse you right there? If you're in a short MVP and you've already taken one in the short MVP, don't take another short in the short MVP. You can take a long, but not a short. Now, if you guys want to take more, that is up to you. All right, what we are officially recommending right now is one before, one after. But if you're like, hey, all my other indicators are telling me this is still a good downtrend, I'm feeling good about this, I've got expected volume, exceeding expected volume headed down, I've got the apex pattern in my direction, I just got a new E, maybe you're all trading that, maybe if you want to do that, that's up to you. Okay, Mike, I would still only take one. Okay, I would feel better about it being an elevator sling, but I'd still only take one after, personally. Okay. Now, what does that mean? Let's just look back over here at the forum, because Lori, I believe, posted. Where did it go? It's right here. A clarification of what do I mean by only taking one in the trend. All right. So she posted this here. Is you've got all these down arrow, down bars, and up bar, down bar, up bar, down. So you had short trend catcher, long trend catcher, short trend catcher, long trend catcher. Okay, we're not talking about trend catcher. We're talking about MVP. So all of this here would have been considered a short trend. So I can take one before it, I can take another one after it, short. But I'm not going to take any more shorts again, in this short trend, meaning while the MVP is short. I can do it long if it happens, but I'm not going to take any more. One of the reasons to this as well is, I don't know if I have any examples of it on this particular chart, but what you'll find sometimes is, probably need to pull it up on a different chart. You'll find sometimes as well that the last bar before a flip, a decent percentage of the time, is a wick bar because it's got some back and forth on it about the flip. And if you're not careful, you're always taking that last entry. That you're taking that last buy at the high, that last sell at the low, and you could get popped on quite a bit. Okay, quite a bit of those. So another reason for that rule. Let's see here. Mike, I'm going to share that. Mike Darty wanted you to know after 60 days of sim, I made $13,947 in April. Not bragging, just saying thank you. Did NQ one contract only. This has changed my whole outlook. That is awesome, Mike. Glad to hear that. That is great, great stuff. And if you can maybe add some of these in as well, might pop that number quite a bit up there, huh? Awesome. Very good. Very good. Okay. Let's move along here real quick. See what else we got to cover, and we'll get to some questions here. So that's entries, targets, and stops. Okay. Again, test your markets. I know that everybody wants a 1, 2, 3 ABC, do it exactly like this. And we try to give you that as much as possible. We do webinars, we do trainings, we do training videos and courses. You know, I just showed you right there in the forum, everything's laid out for you step by step, charts, arrows, settings. We've got that for you as much as possible. Okay? But also test your markets. You know, you may have your favorite markets, your favorite times of the day, whatever. Trade your market, test your markets, see exactly what you're comfortable with for your profit targets and your stops with these scalps. Okay? You might find, okay, I know y'all have heard, you know, Lori say, hey, a lot of these, or people say, hey, a lot of these I like to go for 1-to-1. I scalp for 10 ticks of profit target and 10 tick stop loss. Well, you know, there's nothing wrong with that. I mean, that's great. Going 8 for 8, 10 for 10, no problem with that at all. All right? But there may be times where you're in a trade and you're going for 10 ticks of profit and you're up 8 ticks, right? And then what happens? You're up 9 ticks and the markets are slowing down. Things are starting to hit a, you know, support or resistance level, and it comes back. And it goes down to your stop loss, and you end up losing on that trade when you're only 1 or 2 ticks away from your target. Now, sometimes that's just going to happen, right? That's trading. But be aware, even though you might have your ATM strategy set up, so you hop in a trade, it's set for 10 ticks up, 10 ticks down, boom, I'm in. I've got my stops and my target set, my ATM strategy set, I'm walking away. You know, if that's what you want to do, that's your call. Personally, I don't. I still want to monitor that trade. Why? Well, what if I'm going for 10 ticks and I'm up 8 or 9? And what if I'm trading in Q? I'm trading in Q, right? And it's moving, it gets up there. Man, it's just teetering. I'm up 8 ticks, then I'm only up 6 ticks, and I'm up 8, then 9, then 7, then 6. You know, hey, it's been moving steady, but now I'm hitting that level where it's starting to, man, it's starting to hit some resistance. And then I'm looking at the other 3 indices, or like a BMI indicator or whatever. I'm seeing the other 3 indices are all starting to do the same thing. Like everything's starting to, it's not just my NQ, it's all the indices. They're starting to hit a little resistance, and oh look, ES is starting to even go the other way. you might want to just go ahead and close out and take your 8 ticks, right? Just kind of like with binaries. You buy a binary for 50 bucks, it gets to 95, get out, you know? Why risk it and wait? So monitor your trades. So we'll give you some ideas of what we think as far as some good recommended, you know, stops and targets, but still monitor your trades. Be aware of those things. Be aware when you're almost there and things start to hit a little level. Do you really want to stay in that trade just trying to get 2 more ticks, but end up possibly losing the 8 you're already up and more? So be aware of those things. You see that happening, hop out and take it. Okay. Be aware, you know, if you're trading indices, what are the other indices doing? Okay. Am I in a trade and I'm up, but it's almost pit closing, and those last few minutes of pit closing can just get all wacky? Get out. You know, what if I'm coming up to a deviation level? And I know Lori addresses this as well in her THT video, where she might tighten up that stop, tighten up that take profit a little closer, or she might not even take that trade just yet until it pops through that deviation level and gives her another indication to enter. Okay? So, in a nutshell, what I personally say is your bar size. Okay, it's all dependent on your bar size. If you're using let's say you're using a 10 tick bar size, just as an example, you know, and you're like, hey, I want to go for 10, I want to go for 10 and a stop loss at 10. Well, you can do that, but I can show you so many times on the chart where it can pop against you just right to your bar size, maybe even 1 over, and kick you out and then come right back to you and right back in your direction. So I personally say, for my stops, and I think Lori was using these same things too, I think your target should be your bar size or your bar size minus 2. So let's say you're using a 12 tick bar, you might want to just go for 10 ticks, you know, or, you know, you can set it to go for 12, but, you know, watch it. If it gets to 10 and you see any hesitation, just get out. But I personally like, for my target on my scalps, my bar size minus 2, and for my stops, I personally do my bar size plus 2. Because keep in mind, if you've got a 12 tick bar, for it to make a new bar, it's got to go down 1 more tick, right? So you're at 13 already. So for it to come all the way back up to the top of your previous bar, I just give it 1 more. Just because I've seen so many times. Now, none of us want to have too big of a stop. None of us want to get hit too hard. Totally understand that. But I can also tell you that I've so many times seen it pop up against me to my bar size. I get stopped out, just lost 10 ticks, 12 ticks, and then boom, flies down 30. Seen it so many times. Okay? So, again, everybody's different here. That's what I personally do, and I believe that's about what Lori does on most of her trading as well, not necessarily on ZB, on bonds, but I think with oil and so on. Now, so target, -2, stop, +2. Okay? What about trailing your stops? Well, there's a couple things you could do. All right? And this is more of a personal preference. Depends on your exact account size or what instrument you're trading. Just more of your personal preference and your trading psychology. Some people trade different. Some people are like, hey, I'm fine. I've got a decent sized account. I'm fine with using a 12 tick bar and using a 14 tick stop. So if I'm trading like Russell or oil, $10 a tick, that means I'm going into this scalp looking to make 10 ticks, 100 bucks, but if I lose, I'll lose 140. So it's not quite a 1-to-1, obviously, but as long as I have a good enough win ratio, I'm good with that. All right? Because I've seen it, especially on Russell or oil, I've seen it pop so far up and then come right to me. So I'm great with that. Okay, you might be. No problem. Perfect. Some of you might say, man, I just can't handle loss, loss, loss. I'm okay with a real tight stop. So, all right, hey, I entered. Oh man, it came back against me. It popped me right out. But hey, I only lost a few ticks. I'm fine with that. I can handle a $20, $30 loss. Boom. $20, $30 loss. Boom. Bam, $100. $20, $30 loss. $100. Some people can do that. They don't like the feel of those bigger losses. They like to only take it when the market's just taking off in their direction. I don't want it. I don't want those retrace trades. If I hop in and it starts going against me too much, I just want to get out. Well, you can, but that's going to hit you. If your stop is too tight initially, it's going to hit you. But what you can do, I know this is something Lori covered as well. Let's say you hop in a trade and trade goes in your favor and you're up 6 ticks. So let's just say, for numbers sake, you were shooting for 12, you're shooting for 10 ticks, and your stop was 12. And you're up 6 ticks, like your P&L showing profitable 6 ticks. Well, now what do? We've all been there, right? It's like, okay, I'm up 6 ticks, I'm up $60. I'm hoping it keeps going up to 10. But what happens if it comes down to 0? So I don't get that 6, and I let it go against me 12 to my stop, or 14, and I'm down 140. Still only 140 loss, but you feel like it's a $200 loss, right? Because yeah, you lost 140, but at one point you're up 60, so it feels like a bigger loss than it is. So what can you do? If you're up 6 ticks, you could move your stop up 6 ticks. So when you started flat, you had a 12 tick stop or 14 tick stop, right? Well, when you're profitable 6 ticks, you could move your stop up 6 ticks. So now you're not actually going to be down 14. You'll only be down 8. Okay? And you're still at that point still have a 14 tick buffer there, right? Because your stop is technically 8, but you're up 6, so it's still 14. You're still where you were. You're still given that bar sizing, that movement, the same amount of movement. But since you're up profitable 6 ticks, you're moving your stop up to match that and tightening your exposure there. Okay? I know some people that say, all right, when I'm up 6 ticks, you know, I want to move it 150%. I'm going to move it 9 ticks. Okay, there you go. So now you technically only stand to lose 5 ticks, $50, right? And you've still got kind of 11 ticks of movement there. I know some people, and I know Lori does this sometimes. When she's up 6 ticks, she'll just move her stop to break even, or like 2 ticks under break even. So it's like, hey, I hopped in, market kind of went against me a few ticks. I was down 10, 20, 30, $40. Now it's coming back to my favor. I'm back even. Now I'm up 1, up 2, up 3. I'm up 6 ticks. Like, the market's headed my direction. So now I'm just bringing my stop all the way to break even, or maybe a couple ticks under it. And I'm up 6 ticks. I still want it to go up to 10 and get out. But if it comes down and goes against me, boom, I'm out. I'm down $20. Not a big deal. Right? Well, some people may like that. Now you'll see that comes and it'll knock you out on retrace, a decent percent of the time, but you're only down $20. That's a lot easier to swallow than $140. But if you get hit and you're only down $20, and then bam, the market goes back and hits 10 ticks, you're like, oh man, I missed it. But you know what? You're only down $20. And if it comes against you and knocks you out 2 ticks below break even, and then boom, pops right back the other way, you can hop back in it real quick. Okay? So Again, I know sometimes you want an ABC 1, 2, 3, but some of this is not. I've given you some of those with the, 2 ticks over your bar size, 2 ticks under, but there's several ways you can do it. Play with it yourself. You know, see what you're comfortable with. Everyone is different here. Everyone has different account sizes, different trading style, different instruments. Play with it, back test it, market replay it, try some of these stops, okay, or some of these trailing stops after you're up, say 6 ticks or whatever, okay. Let's see here. One other quick thing I wanted to cover that was part of we talked about the basic entries, and we talked about now exits because you have your profit targets and your stop set. One addition, and I had to leave this on replay so that I could show you guys these back pending arrows. I really wanted to open a different chart or screenshot to show you. Let me see if I can find a good example here. On these elevator slingshot trades, if you want to call them that, the way we've been looking at those, and the way that y'all easily identify those is, okay, so we're coming down, right? We get an up close, we get a down close, and we enter. Everybody gets that, right? We're actually going to add a rule to that. This isn't even a perfect example here. I think I have one though somewhere. Let me see if I can find it. Give me just a second here. Lori, I'm just going to cover this one rule here. You know what I'm going to cover. And then we're going to probably call it a day. Do you want to add anything to any of this here? Just let me know while I'm finding the screenshot. Yes, there we go. Let me see if this is the one I was looking for. Because we found adding this one rule into the escalator, elevator trades actually keeps you out of a couple losses. There's very few losses when that happens, but actually does help keep you out. And yep, here we go. Perfect. Perfect example. Okay, so what's happening here? We're coming down, right? Down, down, down. What do we have? Up close, down close. And then right, we would enter. 1 tick below the close of this bar, correct? Everybody follow that? Under just the normal, general elevator slingshot rule. Does everybody follow me there? Coming down, give me some feedback. I want to make sure this is very important. So, we're coming down, boom, up close, down close, then we'd enter, right? Normally that's what we would do. Everybody follow me there? Can I get a yes or no? Make sure you're following me here. This is very, very important here. Okay. And what would have happened there? They would have hit us, right? Yes, it would have hit us. Okay. So, here's one rule, and if you look back, you'll see how this really helps you. We're going down, we get an up close, we get a down close, but did this down close break the low of this wick on the up close? No, it did not, right? Everybody follow me there? So yes, it's an elevator type trade, but it's coming down, it went up, it went back down, but didn't quite go down as much as this bar did, right? So does that make sense how that might not quite be as much volume and pressure coming back down there? So, new rule to the elevator slash slingshot trade. Don't just enter because there was a up bar, down bar, go. Okay? Even, so normally this bar closes, we're in one tick below, right? But it didn't break this by one tick. So we're just going to stay out of that trade. And look, we're awfully glad we did, didn't we? Yep. And I can show you, particularly on the indices, how many times that rule saves your butt. Like just over the past few days. I don't have it up because I had to have this on replay to show you that. Just go back and look at it yourself. All you need to do is slap a chart up and you'll go back and look. And when you see that, when you look and see the times where it didn't break it, you're going to be glad you stayed out of it. Okay? Now, can it break it a bar or two, a bar later or two later and still get in? Yes, absolutely. Okay? How many ticks for entry in your example? Well, we would have never entered because it never came down here. See, we're coming down, up close bar, down close bar, and then it went the other direction. But let me show you here. Mike, this might help clarify it. Where'd it go? Let's see here. Right here. Coming down, down, up, down. Right? Didn't break this wick, did it? You see that? So down, down, up, down. Didn't break that wick yet. Where does it break the wick? Right here. So you can get in there. And we still got, boom, our 4 ticks out of it. Okay? Let's see if there's another quick one. Okay, right here. Up, 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 down bar, up bar. Didn't break that wick, did it? So we're going to wait. Look what happens. That next bar closed up, broke that wick. So we get in. Boom, boom. Got 2 more bars. Probably got a tick there. 4 ticks, 4 tick, 9 tick. I mean, 9 ticks at $30 a tick. You're happy. Okay? Does that make sense right there? Of why we do that? Because right here, if we're going up, 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 then down bar, up bar, and then boom, we get in. What happens if the market just went, oh, down, 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 down? We're not real happy about that, right? So yes, this is causing us to get in a couple ticks late by doing this, but you look at it for yourself. You'll see when it actually happens, gets that momentum and gets up there and breaks through that level, it normally still goes enough for you to get your scalp. And the couple of times, or the times where it goes the other way, is going to hit you hard. So go back and see for yourself. You'll see that it's worth the wait. Okay? See, like right here, we were good. Up, 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 go down, then back up. This bar reached right at the same. So that one didn't happen. A lot of times where you see this is on the reversal bar that has a bigger wick. See, right here, it lined up for our entry. And you'll still have them, plenty of them that line up and you're good. But just make sure that it breaks that. See, like right here, we're going down, 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 up, down. See, that was about matching. So we were good. But you go back yourself and you'll see plenty of them where you were glad that you waited for it to break that level. Okay? Here's an example. Down, down, go up, down. We needed a few more ticks to break that, right? So we didn't get in until here. So we got probably a tick out of that bar, and then we got 4 more ticks here. We were already out at 4 ticks on ZB. Okay? So look that over, but keep that rule in mind. And as you look back, especially on the indices, you're going to see how it really helps save you from a couple of losses. And not only from a couple of losses, but sometimes it'll scare you from retracement, where you hopped in, but oh man, as soon as you hopped in, it was already going 2, 3, 4, 5 ticks against you, and your heart's beating fast. Then it comes back down. Just wait to get into that retracement stuff's done, and you clearly got pressure direction going in your favor. Okay, so yeah, exactly, Mike, especially in a chop market. So let's see here. Okay, guys, let's go ahead and wrap it up here. Like I said, very basic webinar. Just wanted to cover a couple of the basics and clarify a few things there. Add in that rule. I'll get this video recording up later today under most recent webinars. You've got Lori's Saturday THT Traders Helping Traders webinar recording in there. And then some, I think 2 weeks ago on Thursday, Daryl did 3 different scalping videos, even showed some examples live, I believe. So jump in there and definitely make sure to go to that forum post. Okay. Once again, if you're in the forum, you would go to S10 System and then go to right here, Trend Catcher. And it should be the very first post right here. How to apply Trend Catcher Chop Filter right there. And that is where everything is laid out. Trend Catcher, Chop Filter, MVP, scalping, settings, all there for you. Go through this, guys, and get it all mapped out there. Okay. Any other questions before I wrap it up, specifically on the scalp stuff that we covered here? Everybody understand what we're looking for? Everybody understand the entries, the targets, the taking profit, the taking the first one on the flip, and then only taking one more after the MVP? And on the elevator trades, we're waiting for it to break that high or low to keep us out of some of that chop. So again, just covering the basics. Okay, guys, I appreciate your time. Hop on these things, man. They are just, they're rocking it. And you can do some market replay and test them. Obviously, for the elevator trades, you don't need market replay. You can just open up a chart, start scrolling back. You can see those left and right, just up, down, up, down. Those are easy to see. But if you want to see the standard slingshot trades with the cyan, pop a market replay for a few days, let it run, bam, bam, you'll see them left and right. Turn on those audio alerts if you want to get some audio alerts, letting you know when they're up there, you know, if you're monitoring several of them. Watch these videos, hop in the room. I know yesterday Lori got up, made her 5% like in an hour and a half, was done trading at, I don't know, it was like 10 o'clock or something. And she spent like the next, I don't know how many hours in the room, posting charts, answering questions, doing some training on these scalps, correcting a few issues there. Then she spent hours on the phone with me going over stuff, getting ready for some of this. Like, hop in the room. Everybody's doing these in the room left and right. Everybody's excited about them. Lori's training on them. I think Kevin and some of the other guys are doing them in there as well. So hop in there and ask questions and get this stuff down, because these are just great fillers, you know, while you're waiting on these trend catcher setups and trend setups, taking these little scalps, just boom, boom, boom. They're great. So, okay, guys, I'm going to shut it down here. Thanks for your time. I'll get this recording up. Have a good trading day tomorrow and a great weekend. And hop in the room or on the forum or in the help desk if you have any questions or need help with anything. Okay? Thanks a lot.